There's going to be people doing things we can even imagine now.
Until we get the brain chip, and then the commercial will tell you what you want.
Exactly. They'll tell you what you need.
You want this phone now.
Hey guys, welcome back to the show. Oh my, today we have a treat. My favorite content creator, Kevin. How are you doing today?
Hey Mauricio, thanks for having me.
For those of whom they don't know you, do you mind to give us an intro and tell us about yourself?
My online name is just my name, Kevin Svenson Crypto, and I have a YouTube channel, Twitter, and pretty much if you just type in my name, I'll come up on whatever platform you're typing it in on. And so I've been doing YouTube specifically for about 5 years. Really, the start of 2018 is when I started to do YouTube videos and made a couple predictions that turned out to be very accurate, and that's how I got noticed on YouTube. But I started trading well before then. I was trading penny stocks in college and dabbled in Bitcoin because my older brother introduced it to me in 2014, 2015. And I didn't really understand at the time, but I gave him some money to put into his account and then made some money on Bitcoin, not all too much. But it wasn't until 2017 when I was working in Los Angeles that a friend of mine introduced me to Ethereum. And that was actually my biggest start, was buying Ethereum under $50, and seeing the returns on that kind of just made me flip from penny stocks to crypto, because it was sort of the same type of attraction with the quick percentage gains and all that kind of stuff. So that was really the start for crypto for me. And then I wanted to turn it into something more than just trading. Like I wanted to have like a whole career, and I had already worked in film. So I figured why not make videos on crypto? And that's how I got started on YouTube.
That's amazing. I mean, we did cover it again off camera for a bit. And I was telling you, I've been watching your Chainlink videos back in the days. Super good stuff. By the way, Chainlink is still in my portfolio. I love it. It's a great project. No financial advice.
Of course. I mean, it's a blue chip now. It has to be in your portfolio. Yeah, I mean, for Chainlink, that was another thing. So first of all, it was the bear market predictions got me noticed on YouTube, and then it was Chainlink as well, where I made some calls at 50 cents or so, and then kept making videos on it and kept updating people on YouTube and stuff. That was a really interesting experience, because what it made me realize was that to find the right altcoin picks to make a lot of returns, that process is actually not as complicated as people think it is, right? So nowadays what you see is a lot of people are just kind of like buying every possible coin that's out there, and they think they can't miss out on every single coin. And for me, the process of finding a really good altcoin is basically, you just have to find something that makes sense to you. First of all, has to make sense. And second, is it going to change the industry at a fundamental level? Because a lot of people pick coins that are kind of just trending, that look hot, and people are just talking about it, but they're not really looking at it. Is it going to sort of flip the industry on its head in a way? And when I found Chainlink, this was right after the 2017 bull market, where every coin was just vaporware. Like every coin was just complete crap, really, in the 2017 bull. Like barely anything survived. And after that, I come across Chainlink in I think it was end of 2017. And basically what I got from it was you can make a smart contract smart. You can allow smart contracts to interact with real world data. And at the time that didn't exist. And at the time I was like, wait a minute. Okay, this makes a lot of sense. We have smart contracts, which is just like a set piece of code that just sort of has the same output every time. But you add Chainlink into the mix, and now that smart contract is changing the outcome in real time. And I was like, well, this makes a lot of sense. This kind of changes the game completely. And it was almost that simple. I was like, that makes sense. This is going to change the industry. And I just started buying it. And then after I started buying it, I started to do more research, because buying something is some of the best ways to get incentive to do the research. Something that a lot of you have probably experienced. You ape into a coin and then you're like, oh wait, let's research this. And that's kind of what happened to me with Chainlink. But it just has to make sense, and it has to change the industry at a fundamental level, specifically in the area of infrastructure. When I look at altcoins, I look for the things that are providing infrastructure to the ecosystem, because those are the things that are going to stick around and last. And those are the things that actually matter, the things that allow other projects to build on top of. Those are the things that are going to last forever. well, at least for a very long time. And that's why even today, Chainlink is still here. It's in our portfolios. And so those are the things that I look for.
Yeah, super well said. And to all the Marines watching, we salute you.
That's right. All the Marines on Twitter.
Exactly. But I completely agree with you. And by the way, the sooner you put some money into it, then you are invested. And oh my, then you want to read everything about it, stay up to date.
Then you become a full expert.
Yeah, indeed. Yeah. By the way, we have a lot in common. Like we were saying, also my brother introduced me to crypto. So shout out to my brother Fabio for introducing me to crypto. Similar to you, I said to him, hey, take my money and do whatever you want. I don't understand half of it. So similar to you. And now that we kind of touched into the altcoin universe, do you have any specific ones you are looking into at the moment?
I have quite a few altcoins in my portfolio, but in terms of like any specific one that I want to shout out, not really. And this is something that happened in the last cycle. Was my best. Well, Chainlink was a lot earlier, but it was still one of the biggest runners in the last cycle. In the last cycle, I bought Polygon Matic at 4 cents, and that was one of my biggest gainers by far. And the way that played out was kind of interesting because it was after the halving that I found it. It wasn't really too well known at the time. And then it was after the halving that I discovered it. And that was another infrastructure play, like I was just explaining before, that was like game-changing, scaling Ethereum. And so it made sense and all these things. I knew it could boost the ecosystem. Getting it at 4 cents and like a week after I get in, it just starts to rip. What I've noticed is that some of the best coins don't exist until like right before or right after the halving, or you won't find them until like months after the halving. And then they go ballistic like after the halving. And so right now, there's nothing that I'm trying to think through my list right now, and there's nothing that really stands out. There could be a few, but the main message there is that sometimes the best coins don't exist yet. So the biggest percent gainers may not even be on the market, or may be just starting to hit the market, and we just haven't seen them yet. Researching, searching, discovering, trying to see where the industry is lacking and where these needs can be filled. Gaming, entertainment is definitely going to be a big one this cycle for sure. And there's a lot of low cap game tokens that I've bought, a variety of them. And what I've noticed is that this cycle, game tokens are definitely, crypto games are getting better. They're more fun. They look better. They feel better. It's a better user experience. There's more to them. Past cycles, most games were really bad. And now it's actually getting better because games are easier to make. And now you have like all these AI generated games and whatever. It's just easier to make. So crypto gaming is definitely going to be a big one. And I'm pretty sure that in this cycle that's coming up, there's going to be at least like 1 or 5 crypto games that trend on Twitch. And those are going to be the ones that have the biggest moves because they're going to hit the mainstream for at least a few months, right? Just a few months probably. And that's where you want to sell, of course, because once everyone's invested, there's no more upside. So if you can catch those game tokens that go trending on Twitch, that's, I think, going to be one of the biggest gainers this cycle. But it's hard for me to say specifically which one.
I like how you explained it, nice and simple. I also like to look into narratives as opposed to projects. It's like zooming into topics. You first identify a narrative, then you zoom in and you have a bunch of competitors wanting to achieve the same thing, more or less. I also think gaming is going to be huge. I mean, what better way for people to be converted into crypto while having fun and getting paid? And the friction is going to become less and less and less. Think about Immutable X, for example, with the passport options. You can just go over there, register all your details, and then you basically log into games. You don't even know you're using crypto. And then all of a sudden, boom, you're getting paid. I also think, like you said, gaming, huge one. Also, potentially SocialFi. I mean, it's still small. I'm sure you remember the time when we had MySpace and then Facebook took the throne, but it took time. So I think Facebook is, Meta, I should probably say, with all their offering and range of products, it's kind of deepening to people. And before we move into a decentralized platform who pays you Ethereum, I think we are far away. But we might see platforms starting rewarding for your interest, your attention, your contribution.
One thing I noticed about the SocialFi, the onboarding process, kind of like what you just explained with the Mutable X, the SocialFi onboarding processes have been super easy. Like FriendTech or Stars Arena, you just take your Twitter and you just connect it. And then it's like and then all of a sudden you just have a wallet and you can just quickly send and receive crypto. There's no like copy address and all this stuff. So one thing that SocialFi showed me is that the onboarding process is actually much easier than we once thought for crypto. It's not too complex anymore. And so this is a very positive sign for mass adoption. Just wanted to add to that.
Yeah, no, super well said. And let's not forget that Elon is getting a payment license. So I wouldn't discount the option of having maybe Dogecoin on Twitter. Who knows what he's going to do.
Yeah, that's inevitable.
Exactly.
It's going to happen.
Indeed. And hey, taking a macro step, I mean, where do you think we are in the market at the minute? I mean, do you buy into the 4-year cycles? I mean, what's your view?
So I actually created an indicator. It's just called Bitcoin halving cycle profit. Or if you just type in on TradingView halving cycle, these are my scripts. It's actually the only one there. And so I created an indicator, or you could call it a model, I would say. And there's a lot of different things on here. But the point is, each halving that takes place, going back to 2012, you have the halving. And then what I figured out is that on average, 40 to 80 weeks is the best zone for profit taking. If you look, the next halving, 2016, 40 to 80 weeks. 80th week is really the main, sort of the big warning. The next cycle here, 40 to 80 weeks. And it's very interesting that basically it's almost the same every time, where it's like, yeah, this indicator is not really meant to tell you where the exact top is. That's not what it's meant for. It's just meant to show you where is the general zone that you need to be scaling out. The 80th week after the halving tends to be the area that it's, sort of like your last call to be getting out of the market. And where we are right now is we're not even at the halving yet. This indicator will plot the halving and then these bars leading into the 80th week. So where we are in this cycle is pre-halving. And pre-halving is always an area that is it is the lowest, the pre-halving dips, I'll say. The dips before the halving are always the area of like sort of the cheapest you could buy Bitcoin forever into the future. So any dip pre-halving, or even right after the halving like that is a generational buy. You never get those prices again. And so where we are in this cycle, I guess I'll just explain it as it's buy the dip season, right? If we do see a dip, it could be sort of that generational buy that you never get again. Maybe, in the next bear market, maybe we come back to the highs, but it's unlikely that you get these pre-halving prices, at least according to history. So it is buy the dip season. Now we are at this point in the cycle where it's pre-halving, and any dip, in my opinion, is a buy the dip scenario. Bitcoin is still, if you're looking at, just some basic macro trend lines, we're still well above the uptrend line zone, like the bullish zone. And in my opinion, this is all an accumulation zone. It's a buy the dip zone. And once we hit the 40th week after the halving, sort of where these green bars start, that's where you want to consider taking profit. And when you're getting closer to the 80th week, that's when you definitely want to be scaling out of the market for sure. So where we are in this cycle is just the early stage. I mean, this is just the pre-party. This is just the pre-game. And things are just starting to get sort of moving. If you look at even the altcoins, the total 3, and you can see that even the altcoins are just starting to get above their sort of yearly high resistance right there, right? So if we just make Bitcoin go away and we look at the altcoin market cap, I mean, altcoins just started to break out right there, right there. So altcoins have barely experienced any growth yet. So the altcoin market is just coming off its lows, and it's very likely going to see a major bull market. 2020, we had the yearly high break. 2024, we're just getting that yearly high break. And so, there's a lot of upside ahead for the altcoins and Bitcoin. So, I mean, just to drive that point home, this is the pre-season, really.
Fantastic, super well said. You're dropping so much alpha here. I mean, there is so many things that I would love to dive into, but I also agree. I think looking at time, it's much smarter than looking at price. So maybe you want to have a bucket of different indicators, because otherwise, you do like I've done in the previous run, which I was super convinced that we would have gone over 100K. So I waited.
I did the same thing. This is actually a really good point that you just brought up, and why I created that indicator. This indicator is a time-based profit-taking model. So it's just basically, it's like when you asked me originally, you said, do you believe in the 4-year cycle? And whenever people ask me stuff like that, I'm like, listen, I believe in the halving. That's really what I believe in. Now, you could also say that I also believe in the U.S. election cycles, because U.S. election cycle years are normally bullish years. And just so happens to be that the halving always lines up on the election year. And I think Satoshi did that on purpose, actually, because it's well timed. It's too well timed for me to think it's a coincidence. And so I believe in the halving cycles, really. And that's it. It's like people ask me all these theories, and it's like, listen, I just think that the halving is sort of the model to be looking at. Time-based profits are important because, let's say, you set a target somewhere, like let's say you think 100 or 200,000 your target, and the halving takes place, and then 40 to 80 weeks later, the price is only at 124. Well, in my mind, I'm like, too bad, you got to sell, because your target didn't get reached, but there's too much time has passed, and then the next halving is coming up. And in between every halving, there is a bull and a bear. Every halving, there is an up and a down cycle. Next halving, up, down cycle. And if you were in the middle of this cycle for the halving and your target hasn't been reached, well, too bad, you should probably be getting out, because there's going to be a down cycle into the next halving at some point. So time-based profit, this was the solution I made, because I didn't take enough profit last cycle. I was just in the same boat as you, Maurizio. And so this was my solution. I was like, you know what? It has to be based on time. At least some, you can have price targets, of course, and you should sell when your targets are reached. But also a part of your profit-taking strategy should also just be time.
For me, it was the first cycle. I had no idea what I was doing. Second cycle, I was like, we're going to infinite. And of course, I've taken no profit. And then the last cycle, I was like, I know, this time I'm an expert, and I got demolished. So it's also nice on your ego. Yeah. It's a nice ego check.
Last cycle, if the Fed, well, one, we had SBF apparently like selling fake Bitcoin tokens on FTX or something weird like that. So the price had some manipulation going on because of FTX. But the Fed raising rates, so I'm 30 years old. When we had 2008, I wasn't really paying attention to the markets with any detail, thinking about the Fed, or I didn't really know too much about it. Of course, as the years go on, I do a lot of research. But for most of my career, we had zero rates. And then we hit this point last cycle where the Fed starts, raising rates at the highest velocity in U.S. history. And I hadn't had the experience to know how to react exactly the right way. I should have known, this is going to drive markets down really quick. But I didn't really have that. And so it was a little bit of a learning lesson to see the direct effect of the Fed, and how the Fed really is the king, and how everything they do matters. When the Fed is acting in a way that is unpredictable, markets tend to not do so well, right? Because a lot of people have the idea of like interest rates going up means that markets go down, and that's not true. We had interest rates rising in 2016, 2017, and the markets were doing really well. Why is that? Well, it's because the Fed was raising rates at a very predictable pace. Everyone knew exactly what they were going to do. They did what they said they were going to do, and everyone felt okay with it, and it was predictable. This past cycle, the Fed did it in a way that everyone's head was spinning. It was just like going up at this rate that people were like, wait, how high is it going to be? I don't know. Boom, 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 boom. Parabolic rise in interest rates, caught people off guard, and the markets tend to not do well when the markets can't predict the Fed's behavior. So that's another factor, is that if the Fed is raising rates, but it's predictable, should be fine. If it's not, maybe it's not fine.
If your building is on fire and is burning down, you can focus on reorganizing your desk. The old building is on fire, so you can't ignore it. So like you said super well, it has an impact on Bitcoin and everything else. So whatever the Fed do, elections, right, macroeconomy, of course. But again, like you said, I think they come to a point where I think you mature as an investor. You begin by literally buying coins, like a casino situation where you go in and you buy it. You don't even know what you're buying. It evolves into some sort of, okay, wait, now I made some money. How it happened? What's going to happen in 4 years? What kind of factors are going to influence these pumps and dumps? Something also I wanted to ask you. So you said something super important. Say, start taking profit. I mean, what's your strategy? Do you go into stable coins? Do you have metals? Do you have stocks? I mean, what do you cash out into?
I mean, so I've pretty much gone full crypto. I don't really do precious metals or stocks. I kind of just like to focus just on one thing. And I think that cash is a very useful tool. And so a lot of people in crypto, they don't like cash, right? They don't like fiat. And it's like, of course, we all agree with the Bitcoin narrative and all the principles surrounding it. But one thing we can't change is that there's a lot of interest in Bitcoin, which makes it very volatile. And so there are these 80, 90% drawdowns in the market. And, I think some Bitcoin maximalists need to get over the idea that it is okay to use cash for, like a year. Like if Bitcoin gives you tremendous gains, if crypto gives you tremendous gains, just start scaling out into, stable coins, cash, whatever, and just, allow that to be a tool, right? I mean, I would just say stable coins and cash. That's what I've been using. So I don't really buy all too much real estate, at least not yet. I had planned to, and then rates started going up, and then it just didn't seem like the right time. Prices went up and sort of bad timing there, but I would just look for cash, stable coins. And like I showed with this indicator, the 40th to 80th week after the halving is a time when you probably want to consider scaling out into cash and stable coins. And I think that a lot of people get too confident in their ideas, and the noise of the sort of crowd gets to their head, where when we're at the bottom and everyone's bearish, people are generally bearish. It's kind of funny, right? This contrarian thing that we always see is at the bottom, everyone's bearish. At the top, everyone's bullish. Well, the reason why that is because the market got to the top by everyone getting invested, right? And so when the crowd is full, this is actually something that's very simple, but I don't think it's understood. The reason why everyone's bullish at the top is because the crowd is fully invested. That's how the price got there. So when the crowd is fully invested, that's when they're the loudest. That's when they're the most bullish. Because when somebody is fully invested, they're going to be really bullish because they're now invested. People are fully invested at the top. That's how it got there. And so that's the important contrarian thing to remember, is that at the bottom of the market, people have sold the most because that's how the price got there. And they are the most bearish as a collective crowd. And those are the types of contrarian things that about market psychology that, I think people always talk about that everyone's bullish at the top and bearish at the bottom, but they're not explaining why. And it's pretty simple, but it's important to remember, just how that works. There are multiple sort of levels of emotional feedback that take place in a bull market or a bear market, where the bullishness grows. There's like groups of people, like if you're buying at 15.5K for Bitcoin recently, that's like group one. Then the people that accumulated from March to October of 2023, that's group two. Now you have two groups of people that are both bullish, both up on Bitcoin. So the bullish crowd is getting louder and larger. And now we have group three as we're heading above 40,000. The bullish crowd is getting larger and louder. And so you get these emotional feedback loops that play in. And then once that feedback loop extends out to the masses at like a critical mass, everybody is fully invested. And now you have a cap on growth. And that's when everyone is the loudest because everyone's invested. That's how the price got there. And so those are the types of things that I think are important and very valuable to learn, because it can tell you when we've reached a cap on growth, right? If it's hitting the news, Saturday Night Live, and it's like all these people are talking about crypto and everyone's invested, all your friends are invested, well, we're pretty much capped out soon and you probably should be getting out.
At the end of the day, like you said, fear and greed, people are selling, other people are buying, the other people bags. So that's how the market moves. And I think something else people tend not to talk about, which I love talking about these things, is when people say, oh, one Bitcoin is one Bitcoin. I get it. I'm all for it. But it's a big but. It depends on how much of Bitcoins have you invested or how much Bitcoins do you have. Because if you have 10,000 Bitcoins, who cares? Bitcoin goes from 70,000 to 20,000. I'm still a multimillionaire. I don't care. But if you're someone who has a decent amount and you go from $1 million to 100,000, you care a lot because a 10x, even from 10,000 to 100,000, that 10x changes lives, whether from 1,000 to 10,000, okay, still good money, but there are some brackets in which you want to do, like you said, you want to think about a strategy because, if you have too many or too little, who cares? But majority of the people are in the middle. They might have those 10x. And how do you tackle the market? Okay, it depends on your age and your risk tolerance and blah, blah, blah. And of course, and many other things. And there is a percentage of Bitcoin I would never sell no matter what. If we go down to 0 or if we go to 10 million, I'm not selling it because those bags are for a long time, kind of for everything. But in between, I have other strategy, short term, middle term, kind of long term thing, maybe a cycle, half of a cycle, a few months. And with those things, you have to consider, I think it's important to consider fiat because at the end of the day, that's what we need to live, right? And unless you are into a monk mode, which is loads of money in Bitcoin and you don't possibly care. But if you are in that middle bracket, you might want to strategize a little bit, right?
Yeah, it's interesting because what you just said is actually pretty important because people don't think about their mindset very much, and it's like when somebody has a lot of money, they're many millions of dollars or whatever, $100 million, and they put $10 million into Bitcoin, they don't even think about it. It's just kind of sitting there, right? It's not too much to worry about for them. It can go up, it can go down, it doesn't matter. They're not fully invested. It's still a lot of money. And so I think that it is important to be exposed to the market in a way that allows you to think correctly and to make the right decisions and to sleep at night. There's something called the sleep test. And the sleep test is, can you sleep at night? And if you're having trouble, you might be doing something wrong. Maybe you're not invested in the right coins or the right cryptos. Maybe you have too much exposure to coins you don't trust, because why can't you go to sleep? If I was 100% Bitcoin, which I'm not, I have a lot of altcoins. If I was 100% Bitcoin, I would sleep like a baby. It wouldn't matter. It literally, if Bitcoin dropped to $1,000 tomorrow, I wouldn't care. But I'm buying more. Because that's how much I believe in Bitcoin, right? So the sleep test is important. Why can't you sleep? Is it because there's something you're worried about? What coins are you holding that you're worried about here? And then you can figure out, then that actually may allow you to edit your exposure in your portfolio to make it better, to make it more optimized. Some people literally have trouble sleeping. And I'm like, do you have too much? Like I said, if Bitcoin drops 20% tomorrow, are you okay with that? And these are the questions that people don't seem to ask themselves, that they should be asking themselves. And, it's a lot of times it's a lack of conviction. It's like a lot of people, I think, that are new to crypto have trouble sleeping because they seem like they have to be like on watch. They have to be watching the charts just in case. And it's like, just in case what? We go to zero? like what are you really worried about?
Yeah.
And so it's like you have to have realistic expectations, have the right type of exposure to make yourself comfortable so that you can, live a normal life and not be sort of attached to the screens at an unhealthy level. This is a big problem, actually. It's actually a huge problem for a lot of new people. They need some therapy, I think.
And by the way, I also agree on I suppose there is a million ways on play the game. There is not one size for all of them. It depends on your risk tolerance, your age, whatever. Majority of my portfolio is Bitcoin. And then whatever I have left, I use to make more Bitcoins. So maybe I have short trades. Some of them I've been holding for a bit because I've missed, quote, the top. For example, Cardano, I've been accumulating a lot since early days. But I'm planning to start selling my Cardano bags as soon as we go into some interesting price, maybe $4 or $5, depends. I'll start to unleash some of it to then buy more Bitcoin. But then, like you said, I think for new people coming in, like we said earlier, if you are someone who wants to make $1 million, sadly, you can't do it with Bitcoin. You need to go somewhere else. You need to go into some places where gains are 1,000x, 100x, because Bitcoin is not going to give it to you. That phase is gone.
Yeah. There's a couple interesting points that I just noted, because a lot of people forget that you need to have a plan for what you're doing. I see so many people that buy into crypto, buy into Bitcoin or whatever coin it is, and they say, I'm in it for the long term, right? And then I'll make a post about Bitcoin's chart. Oh, there's maybe some downside potential this week or something. And they're like, should I sell to rebuy lower? I'm like, wait, are you long-term investing or are you short-term investing? Because you just said you were long-term investing, but now you want to sell to avoid a 1-week dip. Well, now you're no longer long-term investing. Now you got to pay short-term capital gains tax. And it's like, people don't have a plan. So long-term portfolio, or even like your HODL portfolio, like this is like a forever portfolio, never going to sell it. Then there's your long-term portfolio or your position trading portfolio that, you plan to hold for a year or something. And then you have a trading portfolio. And it's like, if you can separate it like that, things become a lot nicer because you're deciding that this is set aside for the long term. And now my trading portfolio, go click all the buttons you want and do whatever you want with that one, right? But just don't mess up your long-term thing and really have a plan for it. Just if you're long-term investing, you're long-term investing. Don't try to avoid short-term dips with your long-term portfolio, and then you're mixing and matching, and then it's like it just gets all messed up, and then you start making terrible decisions that way, And so that's, I think, very important. Bitcoin is becoming a rich man's game. Now, it is the king. It always will be the king. It drives the market up and down. But based on your point, you were saying something about that. And Bitcoin's hitting Wall Street now. So that is kind of an indicator that this is becoming a rich man's game in a way. But the good thing is that we have infinite numbers of altcoins, and the market is still premature, needs to see. It hasn't entered, adulthood, this market at all. We're still buying infrastructure coins, which means the infrastructure is not fully built yet. Like the foundation's kind of there, and now the building is being built, but it's not finished whatsoever.
And by the way, I think Bitcoin is the most valuable asset we have on planet Earth. You know the meme where the guy goes through the hodling with all the cactus and all the mines and all the explosions, and then he gets gets on the top, and people, he's lucky.
It's so funny because we're here every day doing crypto, and then people call us lucky, and it's like, basically, it's like you work 10 years to become an overnight success. Yeah, believe what you want, but it's not luck at all.
Exactly. And this is why I believe, and this is connected to what I wanted to say earlier, which is, I think if you want to make money with Bitcoin, you have to have, this is my opinion, I could be wrong, you have to have a long time frame. Like you said, you don't go in for 2 months, paint 5-10 years, at least a couple of cycles, then you can see some returns. But then, like you said, it's not for everybody, because you have to take a decent amount of money you are willing to lose entirely, park it over there for 10 years and don't touch it. And if you can do that, you will succeed. But then I'll guarantee you, most of the people are not going to make it, because 10 years is a long time to begin with. And when you have an asset who drops 70%, you have to stomach it. You have to be able to say, okay, I'm not selling. The last bull cycle that we've seen destroyed me entirely. And I was talking to Carl the other day, and I said there was a time in which Bitcoin was at $3,000. Everyone was calling $1,000. That for a couple of days, I also lost faith in, because, okay, this thing is going to zero. I'm ruined. I made a massive mistake, but I didn't sell a single Satoshi, neither at 70, but neither at 3,000, right? And to go through that washing phase, I feel like I came out like, I don't even know, like Iron Man. I do care now. Of course.
Yeah, that's actually, it's a really good experience, because like even now, like, I have like Discords and stuff, and people in there will be scared on like little dips on a weekly dip, or even the recent weekly candle that closed red. People are like freaking out and stuff like that. And I'm like sitting there, I'm like, man, I guess I just don't feel anything anymore because of all the things I've experienced. Like, once you go through that, once you've held, your portfolio from, a 70% drawdown over many months, and you sort of go through that sort of just, it's a bit miserable when it happens, when you realize like, oh, I could have sold for much more. But it's important experience, because it makes you much more prepared to handle the swings, even in a bull market. Because even in a bull market, your portfolio is going to see, it could be down 40% in a couple of weeks, right? Let's say Bitcoin's hitting a new all-time high, and then there's a couple of weeks where it has a sharp decline. And a lot of people that don't have experience, somebody that doesn't have crypto experience, is probably going to sell. But if you have a lot of experience, you've gone through it, you're like, that your mind is sort of more primed to deal with that. And that way you can actually start making better decisions in times of high volatility, uncertainty, and your thought process will be much more sort of level because you've been through it. And so, I mean, it's all a valuable tool. All the experiences that you've had, that I've had, that might be negative, they're 100% necessary. They 100% make you a better trader investor to the fullest extent. It actually, I mean, let's say I was going to create a trading firm, which I don't have a trading firm, but if I was going to hire somebody, I would ask them, what was your biggest failure and what did you do about it? And if they acted like they didn't have one, I would say next, because you don't want to have somebody that has never experienced turmoil and doesn't know how to deal with it. You don't hire somebody that's never failed. Because if you're in a trading firm and you hire someone that's never failed and there's something goes wrong, all right, you're going to have a big problem now because this guy has no idea what it feels like, all these things. So you want to pick somebody that's like, okay, this guy's gone through the ups and the downs. He's seasoned. He's who we want. And so that idea that, in trading, if somebody's a trader investor and they say they haven't had a failure, I don't believe them at all. Like, come on, man. It's some of the most important things,
Exactly. And then as long as you learn from your failure, then it's not a failure at all because you learn something. There is one quote that I love from Randy Pausch that said, experience is what you get when you get something you did not want it. So if something happens to you and you didn't want it, then that's experience, right? So to put the cherry on the cake, not only I would have failed my sleep test because I was all in, I should have probably invested a little bit less, stay more comfortable, plan. And again, the plan for me was to be ready for this market in Dubai. Of course, we also had the issue that in London, the tax year goes from April to April. So if I would have stayed another day in London, I would have been taxed for the next financial year. So I had to do something, and I jumped on the plane because the price was doing well. And then by the time I was settled in Dubai and everything crashed, landed.
Wow.
So I was like, Ollie, what am I going to do now? I'm in trouble because I need to go back and, go back to plan B, which is get a job. And, I'm not selling my asset because now, no way. I know we're going to go higher, but then it's going to take another 3 years, 4 years. So again, like you said, probably I could have, design.
Yeah, but it's important to make those mistakes as early as you can because, if let's say in a few years your portfolio is 10 times the size it was even then or whatever, well, now you're not going to make that mistake again. You're not going to make those same mistakes again. So failing early, failing quick is always the best thing to do so that you don't get into a position where you have much more and then you make that same mistake. And it's like, you have to do it if you want to be good at trading investing. You have to do it. It has to happen.
Exactly. And then share it because at the end of the day, we are telling just stories. And if someone is having any value from these stories, then great. If we can help someone, even like a tiny bit % in not having the errors we've made, happy days, right?
Yeah, it's kind of what I've noticed is that you can. I think it's difficult to get people to because of the nature of markets, and there's a little bit of like a gambling aspect of which makes people a little bit emotional and impulsive. It's hard for them to understand a mistake until they do it themselves, unfortunately. Yeah. But if we can help at least somebody, I agree. Might as well.
I agree. It's important to put your face in the concrete. Then you will learn.
It's also interesting when you look at what some top performing traders do. Like the way that they approach their computer every day is very disciplined, very systematic. Because every time you're on your computer and you're clicking buttons, just because you had experience before doesn't mean you can't do the wrong thing again. So there's so much discipline involved with making the consistent, correct decisions on a day-to-day basis every day or whatever it is you're doing. It's one of the most difficult things, I think, is controlling your impulses. That's something that takes a very long time. It takes years.
Yeah, for sure. I mean, having disciplines, like you said, consistency. I mean, those things are characteristics for, like you said, someone who's done a bunch of cycles, has been there a couple of times, and then inevitable is the rewards are coming in. But you have to be able to stomach the volatility, to learn how to fail and fail fast and fail forward, like you said super well earlier. I completely agree, and that's why this is what excites me most about Bitcoin. To be honest, is that option to be in charge of your own. Even, for example, sometimes when I speak to, quote, normal people, they are not in as much as you and me or whoever is maybe watching or listening. they're like, I don't want to have custody. I like banks, banks have responsibility. I don't want responsibilities, I like for other people, that hence why banks have been invented, I suppose, because people are using them. So, and there is all sorts of different kind of people in crypto for all sorts of different reasons. I love the decentralized protocol. I love to be in charge. I love owning my asset and taking responsibilities. I like that. But not everyone is like you and me. Many people are saying, you know what, I don't care about Bitcoin. I just want to take my card. And if something goes sideways, I can call the bank director and they give me my money back, because it's all an illusion, right?
Yeah. I mean, the thing that I'm really most excited about for crypto in general is that it's kind of like the underground railroad of finance. It's like the people that can't be banked, haven't been banked, can be banked, and it's very easy to do so now. And so it's the underground railroad of finance. And so there, it's a revolution, really. It changes so many things. And that's, I think, I would say that's the number one thing that excites me about crypto is blockchain does not start and end with Bitcoin. This is something that Bitcoin maximalists sort of, I don't know what it is, but it's like blockchain is much more than just Bitcoin. It can be much more. And so I think we're going to enter a world where you're going to see blockchain from the very Bitcoin decentralized sort of sense. And then on the other end, it'll just blend with traditional finance into traditional finance. And so the positive thing about that is that there are going to be so many possibilities and so many opportunities for all different kinds of solutions, for all different types of industries, for really just everything. And I mean, crypto is one of those things, kind of like AI, that is just going to be able to be integrated into just about everything. I think that AI is going to have the biggest impact of any industry ever, but I think crypto is a hot second there, because it like we were talking about earlier, it kind of is the currency of choice for AI. I would say crypto, because it's so accessible and it's, decentralized, and you can have automated system communicating with each other across borders. There's no stopping it. And I think that crypto is going to benefit off of the AI revolution, I think, heavily as well.
I see the blockchain as if it was electricity, right? So you can do so many things with electricity. You can connect lights, you can connect a camera, you can connect a recorder, music. So the blockchain is going to enable, like you said, people to build on top. And we have this channel now, this new channel. And if you are bullish on digital, how can you not be bullish on blockchain? Because digital is going to have to tap into it. Imagine, Apple is about to release their Mix VR set I think in February. You guys can get it in the US, February 2nd, which is going to allow you to have a mixed reality experience where you have digital and physical together. And of course, the next phase is to plug in payments and money and rewards.
I think that, going off of what you just said, one thing that I think needs to happen, and I'm afraid that it's not going to happen, is sort of like, how you're saying, like walking and earning money, that just from actions. I think that what people need to do is have ownership of their own data. So if a company like Google or Apple or even the government or the NSA or whoever, I don't care who it is, if they want my data, if they're going to take my data and pull it into their system and then use that for who knows what, probably making money themselves, I should get paid for that. I should get paid for all the data that, like, if you imagine each person in the future, this AI features, each person's kind of like a node in the network. Any data that comes from me through all my actions, that should be literally paying me in return at all times. And that is a way of having sort of a universal basic income, but in a way that is still sort of capitalistic, where you're earning on your own sort of property. It's like you, based on what you do and how many companies want your data, you could be making more or less than other people. If we're going to let companies take our data, why aren't we making money on it?
Will you share what you eat, what you travel, your friends, where do you go, where do you check in, the activities you do, stuff that you like? If you are someone who wants to sell products, so exactly like you said, there's going to be a time, it's not going to happen tomorrow, but I think it will happen eventually. There's going to be people doing things we can even imagine now, and it will make us spend more money.
Until we get the brain chip, and then the commercial will tell you what you want.
Exactly. They'll tell you what you need.
You want this phone now.
Exactly. But Kevin, hey, I know you're super busy,
yeah.
so I just want to thank you so much for your time. It's been
Of course.
an absolute pleasure having you on the channel, for sure.
Thank you so much for having me on. It was great to connect with you. Yeah, I hope we do this again.
Amazing. And guys, by the way, take 2 seconds in the comments down below. You will find all Kevin's link. You have to check out his Twitter account. It's one of my favorites. I actually use it on the Moon Show a lot to show your tweets.
I saw that a few times. Somebody actually posted my Discord. They were like, "Yeah, you're on the moon today." I was like, "Oh, nice."
So thank you for that, and also, of course, your videos. I don't miss any.
Thank you so much. And yeah, just remember there are a lot of imposters for most crypto accounts. So if you type in my name on my Twitter is @KevinSvensson_. There's probably going to be like 10 other ones that aren't me, but you could probably post it in the link below. And then my YouTube is just Kevin Svenson Crypto. And those are my 2 main channels, Twitter and YouTube. That's where I post just about everything. So
Kevin, it's been an absolute blast having you on the show. Thank you so much.
See you later. Thank you so much.
Cheers.